This is sort of like a young man's Bernie Madoff.
Kelly, explain to us what's the big deal with this FTX exchange that completely collapsed and people are calling it Ponzi scheme. It's like a really big deal. Can you explain what that is for us?
Yeah, honestly, Aaron, you said something right before we got on the show, which is this is sort of like a young man's Bernie Madoff.
Yeah, that's what it felt like for me.
What all the indicators are telling me and everything that I've read is FTX was designed as an exchange. They raised capital through a private placement. In the raising of capital, they also started to they built a business that apparently was a competing exchange, like something like a Coinbase, where users opened up accounts, put money into it. And then when they put their money into it, theoretically, they were opening up a brokerage account where they could trade cryptocurrencies. Mm-hmm. Ultimately, what we've learned is two things. One, it was never an exchange. They never had inventory. In other words, if you're going to be an exchange, at some level, you must have the inventory of what you're going to exchange. Years ago on the New York Stock Exchange, it was called a specialist. It was a person that represented a company, and he was the person that would balance a book of all the business of company stock that was for sale and for bid. That's how the exchange was built. And they put all those company reps together on one floor, and that became the exchange. Well, it turns out that FTX really wasn't an exchange.
What was it then? If it wasn't an exchange, was it actually just smoke and mirrors, or?
It was a brokerage account. It wasn't an exchange. So you opened up your account, you put money in the brokerage account. You might have bought crypto, but you probably didn't. You might see it in your brokerage account that you bought Bitcoin or Ethereum. But what was really going on behind the scenes is the money that was coming into those accounts turns out to be funneled to a company called Alameda. And Alameda is owned mostly by Mr. Fried.
Sam Bankman-Fried.
Fried owned Alameda. Alameda was set up as a hedge fund. He would it seems like the money went into the hedge fund and he lent the money out on loans, and he also traded with it.
Wow.
So he's trading with it, generating losses. And remember, he was apparently generating losses a long time before these crypto markets ever started to go down. So that should have been the first red flag prior to the collapse of crypto. Now, that being said, the more important thing is we now know this is a scam. This is not worth anything. Mm-hmm. But people have lost around $10 billion. That's right. About the loss of this. Honestly, that's not a huge loss. It sounds big, but what it is it's a loss for a lot of people that are younger and had accounts in there. They were excited about the concept of FTX. But it is more where I feel that this company is representative of a contagion. Are there other companies out there that are similar to FTX that will be the next domino to fall? Mm-hmm. Until those contagions are determined and other fallout, then we don't know where all these currencies go. Let me tell you what I think will happen in the end.
Yeah, please.
In the end, I think crypto will be fine. There is still too much of a following and worldwide belief in the concept of a worldwide currency. There's no getting away from the fact that the world is now united through technology. Whether we like it or not, whether we think it's good or bad, doesn't matter. It exists. And something like that is very hard to put back in the bottle. It is the genie that has escaped. It doesn't go back into the bottle easily, and therefore it is here to stay. Now, the naysayers have their crypto have their day right now. They will point to the new contagions that will occur, and they will occur, and there will be some other fallout. But what I'm noticing is crypto doesn't seem, yes, it was around 20,000 before FTX. It went down another 15, 20%, 15, 20%. It is not like that 4,000 point drop, 3,000 point drop on crypto has done the damage that was done prior, from going from 70,000 down to 20,000. So these drops, given the size of this contagion, are kind of minute in terms of nominal dollar value.
Interesting.
We should wait on crypto. If you have it, I wouldn't sell it here. I don't feel this is going to zero. And frankly, I feel after the fallout, if you own crypto at a Coinbase or a Binance, or through Paxos or other kinds of brokerage firms, you're generally going to be okay, I feel. Now, I could be wrong, and I'm only giving you my opinion.
Right.
But to me, crypto has always been an option, but it doesn't have any expiration. Why wouldn't I want to own it? Now, I will tell people that if you see crypto again on the rise, you may want to even add to a position. But right now, we're not going to see that probably until another 4 to 6, 7, 8 months into 2023. Because at the end of the day, people are still going to fear contagions. But if the stock market does start to resume some kind of a rally, it's going to be hard to continue to suppress crypto. The market wants to go higher.
Right.
And if the rest of the world is going higher in terms of prices of bonds, which means lower interest rates, prices of stocks mean higher stock prices, I can tell you, I wouldn't want to be out of the crypto market. It will rally with everything else, despite the naysayers. Very similar to the way the market has rallied over the last month and a half. So, no, it's not dead. FTX is dead. Mr. Fried will very likely go to prison. But at the end of the day, this is something that can easily be absorbed by a market that at one time was many trillions dollars large. $10 billion losses.
Yeah.
It's
so
really
what
small
I'm
in
taking,
its general magnitude relative to the size of the market.
right. Well, what I'm hearing you say is that if you have crypto in a legitimate exchange like Coinbase or Binance, those are probably two of the biggest ones out there, it's safe. So the reason that FTX collapsed was because it wasn't an exchange in the first place.
Right.
So
it was a funnel to a hedge fund.
Right.
There's
So,
the Madoff portion.
So my next question there for you is how did it fool so many people? Isn't that something that you should be able to detect kind of early? How did so many people get duped?
Non-regulated industry. The irony was Bankman-Fried was hoping for regulation. Well, if he had a regulator, he would have been put out of business probably many years ago.
Right.
But so I kind of think of that as a deep irony. But at the end of the day, if something isn't regulated, which means they don't know the flow of the money, because anytime there's a kind of a financial crime or any kind of a crime, generally people will always say, follow the money.
Yeah.
And in a non-regulated industry, that's not the SEC's purview. And you know that the SEC and FINRA, the regulators, follow money. Where did that consumer deposit go? What bank did it go into? When did it get transferred? What happened to it after it got transferred? Where is the bank that it existed in? And keep in mind that most of these banks are also offshore. For example, this was in the Bahamas, in Bermuda. So he's in Bermuda, they have access to that kind of thing, but it's non-regulated. Why would they look? So if anything we've learned out of this, the reason it happened is because it isn't regulated. And a lot of people don't like regulators. and I'm not going to say I'm one of them, I actually support the idea, similar to Mr. Bankman-Fried, that things should have to be done in an orderly way if you're buying and selling securities, especially of this nature. And until now, and including now, Bitcoin and all these cryptocurrencies are not securities.
Right. So last question before we wrap up regarding this. There are some of us in this audience, and I know because I've spoken to some of them in Dallas, that get approached by either some kind of other crypto opportunity that's not just buying a coin on the exchange, something like, oh, get involved in this new pre-ICO friends and family pricing, or something similar to what Bankman-Fried, Sam Bankman-Fried was offering as like, oh, this new exchange is going to revolutionize everything. What are some very quick tips and tricks even a novice can question in order to detect, okay, this something seems fishy. The government's not going to protect me because this is not a regulated market. I need to use my own insights to protect myself. What are some tips and tricks you might have?
I'm going to tell you first of all, the first tip is to be extremely wary of an ICO, especially now.
Okay.
That's number one. Just go into it with your radar on and your no blinders. Feel free to ask any question you want, but the main question to ask is, what am I buying? At the end of the day, a coin generally represents something. So for example, a US dollar represents the good faith of the United States government that it will honor the value of that currency. What is that worth? Well, the United States has been around for well over 200 years, closing in on 200. Is it more than 250 now?
Yeah.
We're going to get there soon. 250 years, the government's been around. That's kind of a good track record. It's honored debts for 250 years. What is an ICO backed by? Well, it's backed by something. And if you ask the question, a lot of times, if they can't answer it, then obviously you shouldn't invest. But generally, suppose they do answer it, and they say it's based on artwork. What artwork? Something that you build, that was built as a picture on the internet? And why?
You're talking about NFTs?
Yes.
NFTs were like that.
NFT is also a coin. It's just,
right.
It's a coin or token are really the same thing. Fungible means they just you can't use it anywhere else, which also is something to be wary of, right? If I can only use it within only that one set of coins and it doesn't translate into anything else, where, for example, Bitcoin, Ethereum, they do, but those things don't. Be wary. All ICOs, and by the way, Bitcoin was an ICO at one time. All ICOs have to be based on something. And right now, if a small company comes out with one, I'd be very wary. And we just learned that a much larger one, in the case of FTX as an exchange, there was an ICO on that, and that turned out to be a very large offering, and that failed. So you can take your thought and take it with you, folks. If a big one can fail, you can kind of bet that a small one even has a higher probability of failure. So right now, I really wouldn't invest in any of that until we see the resumption of any kind of a move higher in the major cryptocurrencies. And you know what they are. I don't need to mention them.
We've talked about it at length. The ones with the longest history, for those of you that are just joining us for the first time. Thank you so much, Kelly. We do have a hard stop for Kelly right at the top of the hour, which is right now. Thank you so much for joining us.
My pleasure.
But thank you. And if you want to stay on, I do have some announcement for some of the fun stuff that we're going to have in December. So Kelly, feel free to drop off.
I will jump everybody, but I will say this. I am looking forward to doing these more often. Now we're going to go to a 2 times a month format. I think it's really important, especially over the first quarter of next year. And we've agreed to do it this way with shorter segments but more updates. It keep us a little bit more current, because right now the markets, they are moving and they have been moving. But I think the new format will, I think, be more useful for everybody. On that
Absolutely.
note, everybody, thank you so much and have a good week. Happy holidays.
Thanks, Kelly.